For a new strategy that I have been talking about recently in another group that I'm a part of. Okay. This is basically for your higher time frame shifts indicator that I created, but we will be showing on a 5 minute, and I will show a few other selective trades on a higher time frame. Okay, so what we're looking for to identify are our bull shifts and bear shifts. That is identified by the indicator. You will see where it's highlighted, bull shift and bear shift. Okay, I'm going to be breaking down the other indicators that I have on this chart as well, so that way you guys can have everything that you need to be able to identify these trades and know exactly when you want to get in and when you should be skeptical about taking a trade and how to protect yourself. First, I'm going to be showing you this on gold. So the strategy is really very simple. You're looking to identify these bull shifts when it's highlighted. Preferably, you want to catch these trades when they are inside of a fair value gap. The fair value gaps are these blocks that are highlighted here. You can use the fair value gap indicator by Lux Algo. Just extend the lines to roughly about 200 or 350. This is one that I created myself, but like I say, you can go to Lux Algo and just get fair value gaps. The settings on there should be to extend at least 300 bars, so that way you get a clear view of the day and fair value gaps that are showing from a decent amount of time back. Okay. That's pretty much all that you want to do for this particular indicator. And then you also have my indicator that I created, the volume spikes plus daily VWAP standard deviation bands with the movable dashboard. I will leave the link for this indicator in the description of this video. You also have pivot point standard that you go to, the pivot point standard. Once you click on that, just go to indicators, type in pivot point standard. Right, it'll be right here. Pivot point standard is just basically a trading view indicator. Once you click on that and then go to the settings for that, you want to make sure that your type is set on Fibonacci, auto, 5. Just make sure all your settings align with the ones that I have set up on here. Then you're going to go to and add my other indicator that I made, your high time frame control shift and previous candle break sequence. I will leave the link for this in the description of this video as well. Only thing that you're going to do is when you go on here, you're going to change the wick threshold. Is automatically going to come at 0.50. Change it to 0.55 as it is, and leave the threshold at 0.3 as it is in here. Okay. After we have these few things on here, our higher time frame candles for bear shift, bull shift, fair value gap, pivot point standard, and then the volume spikes and standard deviation bands. Yeah, let me just show you so that way you guys can also see what I have for that. Volume spikes and standard deviation bands, 1.5, 100, it automatically comes. You do have to make sure that you have only use valid highs and lows. All this stuff is going to be normal right here. It should automatically set, but make sure it's on open, high, low, plus close, -4. Show daily VWAP. Show previous daily VWAP, show circles on lines, show bands 1, show bands 2. Everything else, I don't believe you have to do anything besides show dashboard. That way the dashboard makes it closer towards the candle. If it's -1, and then also 2 for the offset. Liquidity sweeps 5, only wicks is where you want to set at. And then also I believe as far as style, you want to turn the first one off and then the second one off and leave the rest of these on. Change the standard deviation bands however you want to see them, whether it's the dots, straight lines, whatever works for you, for the uppers and the lowers as well. And make sure, well, I personally don't like the band fields on, so you turn this off right here where you see the band fields 1 and band fields 2, turn that off. Okay, now let's get down to everything else. So basically what it is that you're looking for is you're looking for these shifts to happen, these bull shifts and bear shifts inside of a fair value gap. Once these alerts go off and then it closes in this, depending upon how you set the alerts up for this, and then I'll just briefly just show you that as well. Okay, once you go in here and set the alerts, it's going to be a couple different ways that you can do it, right? You can set it for the bull shift on the bear shift. That's the way that I set it up as. Once you do this, you can have it once per bar if you want to get alerted before it actually closes, or you can set it once per bar close. If you set it for once per bar close, it's going to alert you immediately once it closes. I like it at once per bar, so that way I get a heads up before as it's forming, and then I can watch it as it closes. Okay, now I want to watch it to as it closes, so then that way I can see that it actually closed and it's set up. All candles may start that way, but they also won't always finish that way. Okay, once you find these candles forming in these fair value gaps, or either off of your standard deviation bands, which are your black dots here, or coming off your VWAP bounces and everything, you want to see once this candle closes for price to start moving upwards. So when price starts moving up, then that's when I enter, and then I have my stop loss automatically set and everything. For that, I'm just gonna log on to paper trading so you guys can see that stuff. As I was seeing this candle start to form, I automatically are going to have my stop loss set, so that way once it forms and I see price start moving in the direction I'm choosing to move in, I'm just going to click on buy. And once, in fact, I'll just kind of rewind it back just to kind of show you guys. All right, so I'm not going to exactly do it how I want because of we are on record mode. So once I see that it's showing up, I'm going to be on market. I hate that it does that because it's not showing me everything. So I will click buy, and I'm going to make sure that I have my stop loss set and everything on this. So I will click buy and let it play out. If you're actually in a live trade, you're not going to be able to adjust this stop loss like that. Your stop loss will automatically be down here, and as price is moving up, I'm going to move the stop loss up to protect the position. I'm going to just stop this because I know it's moving ridiculously fast. That's just the way it moves. But I would be moving my stop loss up as it starts to go in my favor. I would be moving it up to protect the position. You know, however much you feel, whether it's $50, $100 to protect the position. As it continues to go up, you can move your stop loss up and protect the position as it gets up and it starts going more and more into your favor. Okay, I'm just going to exit out of here and then just get back down to the rest of the video. So when you see it break the high of this previous candle and it starts to move up, I enter the position by just like I showed you before, and then start moving my stop loss up to protect the position. These are repeatable patterns that you're going to constantly see. This is also on the 5-minute time frame. It happened right here at the end of the day. When you see ones like this right here, I did take this trade earlier. It was a quick scalp, but as you see, we also have this Fibonacci pivot point level that was right here. So when you see things in the way, this is when you have to be mindful that if you are going to enter on a trade, when you see a Fibonacci pivot point level, or you see a fair value gap, opposing fair value gap in the way, that you have to protect this position quick just in case it pulls back on you as it did on me. I think I probably made like $40 or $50 on this trade, and it came back and it kicked me out because I pushed my stop loss up to that dollar amount. Okay, I said you're going to see these candles happen repeatedly, time and time again. Even this one, it kind of touched off of this fair value gap and pushed back up, but you see we really didn't have a meaningful push above this candle, right? So that trade I did not enter. Okay, same thing up here. We had it wicked off of a standard deviation band, but it was also a bearish fair value gap right here that was in the way, so I did not take this trade. Okay, now if you wanted to take this trade right here off of this bear shift going down, you could have took this trade. Same thing. You have to be mindful, and you have to protect the position at all costs, right? If you're taking it and it's not a fair value gap there, as I'll show you in replay mode once I do go back, right? We didn't have, actually we did. I apologize about that, fellas. Okay, so we did have it off of a fair value gap, but still we had an opposing fair value gap here, right? So you have to be mindful of those. Okay, that if you are going to take this trade, you better be prepared to move that stop up quick. That way it doesn't end up in a loss for you. Okay, this was another trade that I took right here. It went down into the fair value gap off of this candle. It also wicked off of a pivot point, Fibonacci pivot point as well. It closed up. Once it came up, I took this trade. This was the previous day's VWAP. right here in the gray dotted line. Same thing, when you take these trades and there's something in the way, then you want to make sure that you are moving the stop up. Now, if we rewind this back a little bit, even though I did take this trade, right, we do have a fair value gap that's up here, but we do have a little bit of room because this is gold. I say once it broke this high at 41.35, we had a little bit of room up here to 41.39, right? 4 points on gold. That's a $400 move, right? You may have not caught all of it, but if you move your stop up, you could at least secure it $150, $200, $300 possibly before it moves back. Even though in this situation, it did. Let's see. Yep, it went way above that level, right? So if you did take that trade, you could have got in down here at 41.35 and ended up at 41.41, which is, you know, a little, it's actually 41.36 was where you would have got in, somewhere around about that. But, you know, pretty much close to a $5 move, which was still a good position, right? But this is, like I said, this is just about taking repeatable patterns, repeatable setups, right? Same thing here. If you would have taken this one and you would have caught the break, you want to move that stop up to protect the position. You would have got wicked out. Might have caught 20, 30, 40 bucks, depending on how fast you move that stop up there. But repeatable setups all over, okay? Same thing, multiple entries that you could have had taken this day on gold alone, which is also Friday, October 24th, right? You also had at the open, well, actually before open at 8:55. What do we see here? Same thing. We had CPI, which shot us up early this morning at 8:30, pushed up, came back 8:55. It pushed down towards this fair value gap. Same thing, a bullish shift, opened up, pulled down a little bit, pushed up, protect the position as always, right? You're going to see these setups occur early in the morning. You're going to see it during market hours. These are repeatable patterns. The thing is that you want to see it coming either off of a fair value gap, bouncing off of a standard deviation band, or bouncing off of an area where it's a Fibonacci retracement level, pivot point, right? The thing is, if it's not a fair value gap there, make sure that you're protecting that position. If it's anything above it in a way, whether, like I said before, standard deviation band, not really so much, but still be mindful of them, right? But when you see an opposing fair value gap or you see a Fibonacci pivot point, then you want to be mindful of that. Okay, so these setups, like I said, they're going to occur all throughout the day, whether it's at night, whether it's in the AM. The main thing is wait for it to start to make a move above that previous candle's high, or if it's in a bearish, you know, above that previous candle's low, right here, right? Price moved up. On this candle here, it was a fair value gap right here in this area. It did get closed out right here, and I'll just show you a replay. That way I can just show you that it was there beforehand. Press the go. It was this brief fair value gap you saw. It was there, but it disappeared because the price pushed back up into it. And then what do we see? Price start to push back down, push back down. You could have caught more points on the downside. These are repeatable setups that you're going to see just all over. Okay, sometimes they may be short-lived, and sometimes you may find a decent one where price continues to push up. And you know, these also right here are your volume spikes, opposing volume spikes. So as you see these things that are constantly popping up over and over and over and over again, understand that those volume spikes are basically either limit orders that are coming and that as their price is moving up, they're getting hit, and those are opposing. If you're in longs, then those are opposing shorts trying to push price back down, and eventually, as you saw it back down this way, that's when price started getting pushed back down. You're going to see it on the bear side with bull volume spikes that are trying to push price back up. So be mindful of these things when you are seeing them, okay? I just want to show you guys that these setups repeatedly happen over and over again. Some of them are not always going to work out. So, you know, let it break above. If it starts to pull back on you, don't wait until it starts to getting below the wick and then you just losing money. Have your stop loss sitting there. And if it's starting to go against you too much, pushing down, it's okay just to exit the trade. You don't necessarily have to let it go hit the stop loss. Exit the trade. Wait for another setup to happen again. Take the setup again, because these candles are going to happen continuously over and over again throughout the day. right? And these candles, like I'm saying, I'm showing you these things. This is at 5:10 in the morning. Most likely you probably not up trading at 5:10 in the morning, right? Some people maybe, most people are not, right? But like I said, these patterns are repeatable pretty much through all assets that you're going to find in the futures market. I would personally stick to GC, gold, ES, which is the S&P 500, RTY, IWM, or YM, which is the Dow. These are where you're going to find these setups over and over again, right? Some are going to be continuous, some are going to be short-lived. So, as I said, protect the position. And the main thing is look for them inside fair value gaps. Look for them to happen in liquidity sweep areas, where you may see a liquidity sweep happen, which basically that's kind of when you see those parts that were wicked out right here, and they were lit up. That very first one that I showed you when I started this video, it happened in a liquidity sweep area at the end of the day, and it took off. But I say these setups, they're going to repeat themselves constantly over and over again, right? Constantly over and over again, constantly over and over again. You just have to look for them, set the alert, and make sure that it's breaking above it. And when you see it happen, take the trade, protect the position. Very simple strategy to follow. Doesn't take a rocket scientist to do it. Just look for it. And like I said, constantly over and over again. Some are going to be short-lived. Some of them are not going to work out. And then some of them are going to be good moves, right? That are going to net you a decent amount of profit. All you have to do is honestly just sit back and wait for it, right? Today is actually October the, hold on 1 second, I'm trying to pull it up on my phone right here, the 24th, right? We're back to the 21st. And as you see, I'm still showing you the same setups again, over and over again, right? So if I constantly just keep going back, just scrolling on this one asset, which is gold, right? And this was the one right here I was telling you, liquidity sweep, created a liquidity sweep area, also had a bullish volume spike. We also see the bull shift here. And then when this opened up, it probably dipped down just a tad bit and then pushed back up. Right, protect the position. If you didn't, if you did, you might have got wicked out on this candle and it still pushed up. Oh well, wait for it to happen again. Repeat the same process, because I say it will repeat over and over again on whatever asset that you go to. Right, we're gonna click on ES now. We'll get off of gold since I've been showing you a bunch of them on gold. You may say, well, hey Sam, you're just showing me on gold. No, we're gonna go show you on a couple different ones as well. Okay, these here, this was 9:30. I say some of them are going to be short-lived. Just be mindful when you see anything in the way. Protect the position, like I always say. Some of them are going to be short-lived. Some of them are not going to go through, but repeatable patterns nonetheless. All right, we're going to drag it back just a little bit more, and I'll show you even in the pre-market, right? 6:20 a.m. What do we see right here? Volume spike, bull shift, standard deviation band, price continue to move up. All right. 3:45 a.m. Short move. I probably wouldn't be trading at that point in time. I like to personally, honestly trade during regular trading hours. And when you trade during regular trading hours, even after hours, right? 4 o'clock. What do we see? Same thing. Inside a fair value gap, liquidity sweep. Price opened up, next 5-minute candle, pulled down a little bit, pushed up, more points. All right. Personally, like I always say, I like to see them come off of a fair value gap, even though this one was here, right? It didn't honestly give you any trigger to let you know that it was pushing up above it, right? So if it didn't, then you don't take the trade. If you take the trade when it happens, right, fair value gap, pulls down, pushes up, protect the position, you might have got wicked out. If you find a setup, and I'm sure I will see one here shortly, where it happens when you see the setup come and then an expansion candle happens afterwards. So I'll just kind of go off of this one right here. Okay. This wasn't the greatest one, but I'm sure I'll see some more as we kind of going through this. Here it happened, pushed up, created another fair value gap, price dig down into it a little bit, it pushed back up. This one wasn't long lived. These are situations where you could possibly add on to the position. If you do add on to the position and stuff like that, protect the position when you see these situations happen. Okay, because it can, next candle could open up and it could go against you, or this one could pull back even further. So just be mindful if you decide to add on to some positions. But as I said, and I know it's kind of getting repetitive, it's just repeatable setups over and over again that you will find that happens constantly in the market. GCES. It does happen on NQ. I personally just don't trade NQ. It's a little bit too volatile for me per se. But come on, guys. I don't really know what else to keep telling you as far as these are repeatable patterns, right, that are constantly showing up in the market. I just like to have it be able to be identified for me versus me having to dig through them and find them. Is this the right one? Let the indicator do the work, right? Price moved up, expansion candle, got our bull shift right here. Could have ended on this trade, pushed up, protect the position. You can protect it at break even, right? You can protect it at 25, 50 bucks and let it continue to keep going up. Or if you don't and you protect the position, and let's say if this candle right here from this range to this range, let's say it shot up to $150, you put it right here, kicked you out at 100. Okay, wait for it to happen again. All right, if this shot up and kicked you out at another 100, okay, you made 200 bucks. If it happened to right here again and you let it shoot up and then you only made 50, you put the stop loss at 50 bucks and 50 bucks. Right here, you netted 100. Right here, you netted 100. Right here, you netted 50 bucks. $250, you know what I'm saying, in a matter of a few trades, right? And this was towards the end of the day, right? From 2 p.m. where I said 100, possibly another 100, possibly 50 bucks, 250 bucks. But guess what? All right, as we go back and we look through the rest of the day, we might have found some more trades, and I guess right here we really didn't, right? Didn't really give us anything here. Didn't really give us anything here. You might have could have tried to cut that and got wicked out, but I wouldn't have did it simply for the fact because it was a liquidity sweep right here beforehand, and it was also a bearish volume spike right here. So taking this trade, going into this is not one of the better setups. Okay, so today, let's say you only caught those couple trades and you only made 250 bucks. So what? That's still a good day. All right. Didn't really see any other ones that happened. Well, actually, you know, if you were up, which I doubt you probably were, but, you know, at 5:30 a.m. right here, depending on how early you started the trading day, could have made more money. I don't want to just keep sounding like a robot saying the same thing, but it's just repetitive setups. Sit back, wait for it to happen, find your fair value gaps, find your liquidity sweep areas, take the trade, and make some money. And just wait on those repeatable setups and let that be your guide. Okay, I'm going to play a little something for you that I was listening to beforehand, and hopefully this helps you.
But some of you will get caught up in this trap of constantly learning because you're afraid to sit down with one model, follow the rules, stick to that process, and let it yield whatever experience is intended for you. And then you have a baseline. That's why I could literally give out a model every single day. And some of you want me to do that. But the only thing it's going to do is it's like a dog in a meat market. You ain't going to know what to do. You're going to run around and you just chase everything. Instead of simply sitting down and say, you know what? I'll just have a full egg. Thank you. And I've done that with the 2022 model. I've done that just recently with the silver bullet model. I have lots more coming, but you don't have to have anything else. The optimal trade entry was enough. OTE pattern, the flagship that was on my YouTube channel. That's enough. The 2022 model, that's enough. You can use it in every session. London, New York, PM session. You can use it in London close. You can trade it in Forex, you can trade it in futures, you can trade it in crypto, you can trade it in whatever you want to trade it in. It works. There's no excuse. You have zero excuse not to have some baseline by now. You should have some kind of experience where you say, you know what, this works. And I have to work on refining it, but I know it works because I've seen it in back testing, looking at where it has done this in the past. I tell you what time to look for these things to form. That way you're not just going around and looking at charts blindly. Go right to these specific times of the day. That's where it's going to form. For those people that go back in their old data and their old charts and they study that, they see it, they don't need me to do 50 examples of that. They don't need to see me do it live 50 times a week. They're sold on the idea, okay, there's something here. It merits more investigation because I see the evidence of this thing occurring. It's not contrived. It's not conjectured. It's not made up. It's not fabricated. It's really happening every day. And once you see that, you don't need to have anybody else to cheerlead for you. You know, okay, there's something here. I'm going to mine that. So I give you just a few models so that way you go in and you now start working on the skill sets that are required. Not veering off course, hopping from one PD array, one approach, fair value gap, inversion, fair value gap, breakers, market maker models, buy, sell. There's 1,000 things out there that I teach. Every individual one of them is a model. Every single one of them is an individual model. But I give you, this is the best way to learn. I'm allowing you to pick your weapon. I've opened my arsenal doors. So here it is. Look what I have here. Pick your weapon. But nothing changes when it comes to time. Time of day, these things occur at specific times, certain days of the week, certain weeks of the month, certain month of the year. I'm allowing you to bring your personality, your personal influence, because you're the problem and you're the last puzzle piece. See, some of you are sitting around here, you're writing diligent notes, you're doing this, you're doing that, and it's wonderful. But you're all waiting for that last penny to drop. The last ICT puzzle piece. And then it's all going to come together. It's all going to be crystal clear. Once he tells me this one PD, the 81 PD arrays, final last one. That's it. That's it. That's the holy grail. No, it's not. If you walked over to your mirror right now, look at yourself real quick. That's the final puzzle piece. And it's always been you. You're the reason why you succeed, and you're the reason why you haven't succeeded yet. And ultimately, you and you alone are the only reason why you're going to fail. That's not me talking down to you. That's me telling you the way it is. That's just the way it is. Are you coming to me for a constant dose of something new, but have done nothing with what I've already given you? But some of you.
And this is not about ICT or rants or anything. I just want you guys to pay attention that some days are going to happen in multiples. Some days they're not, right? Show up every day, see the trade, take the trade, protect your downside, and also protect your upside. Okay? Hope you guys enjoyed this. I will leave the link to the indicators in the description. As I stated before, simple, repeatable patterns, repeatable setups happens all throughout the day, all throughout the night. Only thing you have to do is make sure that you're there when they do occur. And when they do occur, take the trade, protect the position. Don't allow yourself to keep falling into the same patterns of not protecting your position, looking for the trade to turn around, except that sometimes that it is not going to work out. And the times when it does work out, protect your position to make sure that you protect your capital. Hope you guys enjoyed this video. Talk to you soon. Oh, I almost forgot one thing. Sorry about that. And this will be the end after this as well. Want to turn off the volume spikes indicator. You can also set your alerts for higher time frames. This is the 4-hour. Wait for the 4-hour shift to happen. 2 a.m. Continued up to 6 a.m. I say these are repeatable patterns that are going to show themselves on all different time frames. 4-hour, 2-hour. It's going to show up everywhere. So it's not just about catching these trades on the 5-minute. These are repeatable setups that are going to show you their hand all over. 11 p.m. at night, right? 1 o'clock in the morning, where you can find these trades. It's just about showing up, okay? Like I said, I'm not going to waste any more of you guys' time. Check the time frames. Look for your entry. Take the entry. Stay dangerous.